Okay, in this video we're going to go over some tax implications of buying, selling, and earning crypto. So stay tuned. Let me start by telling you two things. Number one, I am not a tax professional. This is just based on my own research. And number two, what I have to say here applies only to U.S. residents, those that are subject to the United States tax code. In your country, things may be a little different, a lot different, I don't know. Okay, first example is a short-term capital gain. You buy $1,000 worth of Bitcoin, you hold it for a month, and then you sell it for $1,500. You've realized a $500 profit. Because you held it for less than a year, that is what makes it a short-term capital gain, and the tax on it would be 0% in the form of capital gains tax. You would just declare that $500 as other income, and whatever tax rate you fall into, that's the tax that you would pay on it. Example number two, long-term capital gain. What's the difference between a short term and a long term? If you buy it and you hold it for 1 year and a day or longer, then it is considered a long-term capital gain and it's taxed differently. So in this example, you buy $1,000 worth of Bitcoin, you hold it for a year and a day, you sell it for $1,500. You've realized a $500 profit, and that is considered, because you held it for a year and a day, that's considered a long-term capital gain, and that will fall into three categories for the capital gains tax rate: 0%, 15%, or 20%, and that depends on what your other income is. I don't know the exact amounts, but roughly for a single person, if your income is $38,000 or less, then it would be 0% capital gains. You would just declare it as income with the rest of your income. If, on the other hand, you're above that $38,000, and again, that's just an estimate, check with your tax professional, then you would pay a 15% capital gain tax on it. And if you're really, really wealthy, someone like Warren Buffett, for example, then you would fall into the 20% capital gain tax rate. Okay, crypto earnings, how are they taxed? Well, basically, you declare the amount of earnings that you had, and you add that to your other income, and whatever tax rate you fall into, that's the amount of tax you pay on those crypto earnings. So, for example, if you own Theta and you've staked it, and over the course of the year you earn 10,000 T-Fuel, then when you file your taxes, you file based on whatever your other income is, and then whatever the value of those of T-Fuel that you earned, you would declare that as additional income, and whatever tax bracket you fall into, that's what you pay on them. But you have to declare them. Doesn't really matter what the value of them were at the time you received them. It matters what the value of your entire bag is on December 31st of the tax year that you're filing for. So, you know, they could be worth twice as much on December 30th, and then there was a flash crash. You just got lucky, because you're only going to pay the value of them on December 31st. And that's only for the ones that you earned during that tax year. The ones previous to that don't matter for that tax year, because they were declared in a previous year. Well, I hope this video was helpful to you, and if it was, give it a like on your way out, and I'll see you in the next video.